Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Monday, we took a total of 3 trades, 3 winners, for a total absolute return of $4,236 or 2.37% in our 1% risk model portfolio, where we are risking no more than 1% per trade. All trades were to the upside, long calls, the biggest winner being 74.25 for 129% return. Also traded the 74.35 and 74.30, all 3 trades winners. Now, the SPX closed higher, up 1.18% to 74.40. Growth sectors outperformed. Technology up 2.4%, semis up 3.3%, and mags up 3.1%. Very strong outperformance from growth. Not something you want to fight. Now, we did see some rotation out of cyclicals and defensives, so it was not a broad-based rally, and this is the reason why breadth was relatively muted. Trading negative 200, plus 200, very close to that zero line. But growth is what matters, right? We look at Mag 7 names collectively. That's about 55% weighting in the S&P 500. So when they outperform, the market moves higher, and we saw a very nice move in Mags to that downsloping trend line. Now the question is, are we going to get that breakout or reject? We'll find out in coming days. But very bullish action. In our base case, that we would break above 7,400 and potentially break out of the 74.20, 74.25 zone. Now, we didn't see a whole lot in regards to that breakout. And the reason being here, weak breadth, so it was not broad-based participation. And we were very close to the implied high, which was 74.35. That was a 1.1% implied move. We closed up 1.2%. So that was a decent break, but it was more of a grinding action rather than strong upside momentum. Now, keep in mind, this was upside resistance all last week, right? And we tested it once, twice, 3 times, 4 times, and then finally broke on the 5th. So the more times we test the level, the more prone it is to break. And I was not playing the downside at all. Even though we did have a nice rejection here, I was not interested in shorting as we were expecting that potential breakout. So in regards to the setups that I played, and we play levels. So let's just clean the chart up here, and we'll drop to the 1-minute time frame. Went long right at the open, so we have the transitional level at 7,400. That's the red line there, and we were looking for. I bought before we had that break, but the market, when you're trading a range, the market's going to gravitate to the upper bound, the lower bound, and again, that upper bound is very clear. So we played that move. This was the quick, 130% return trade. And then we rebought the retest here of 7,400 and then closed out into that move. Now, I did enter again, kind of playing this low of day, expecting that to hold. But of course, we broke the flip and we saw that downside momentum, which we saw a lot last week. We came down into 73.50. This was gap fill, G1, so a big gamma level. It was also the max put. And then we rebought here. So actually, this was a half position entry and then added the other half and then closed out into this move here for a nice profit. And then that was basically it. Most of the trades, actually all the trades, were taken in the first hour. I didn't want to fade this. And yeah, this was a nice drifting action. But most of the... Let's say generally, most of the momentum occurs in the first hour and the last 2 hours. So I generally like to favor that in regards to single options. I try to avoid trades kind of midday. And the reason being here is I went over my trade statistics since we started this portfolio for 2 months now, and 70% of my losses occurred from afternoon trades. So I'm trying to cut those out as much as possible. Now, some of my biggest winners were afternoon trades. So I don't want to eliminate them completely, just be a little bit more selective in regards to the levels I played. But overall, bullish session. We closed at highs. Let's see if we get continuation tomorrow. For today in the pre-market, the S&P 500 continues higher, up 0.2%, with the previous session's high at 74.44. A break is the continuation signal. Now, just overhead is some big resistance. We have G1 at 74.50 and that downsloping trend line, which connects the swing highs. So very similar to the MEGS trend line. So this is a confluence zone. If bulls can break it, well, resistance overhead is a little bit less clear, and we'll highlight that on the GEX chart in a second. But major resistance on the upside, the SPX call wall at 7,500, and is in play today as it's within the 1 standard deviation range with the implied high at 75.14. But in order to see a move of that magnitude, we need to see continued rotation into growth. Pre-market, tech up about 0.6%, semis up 0.8%, and megs up 0.2%. Now, on the downside, what was once resistance becomes support. So support here today, 74.25, followed by the SPX flip level, 74.10. That's a 10-point shift higher. And then the zero gamma level at 7,400. A break below this zone, we would anticipate volatility to pick up. In regards to the trend, the higher time frame trend is still down, via this trend line here, down sloping, potential resistance. But on the 15-minute time frame, the trend has turned bullish with the 20 EMA in green above the 40 EMA in red and upsloping. Transitioning over to our dashboard, total gamma exposure for the SPX is positive, 400 million notional, trading above our transitional level of 74.10. Above, most strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. 74.25 is net negative. A break of a net negative strike tends to spark momentum. In the event this occurs, we could see a quick move down to 74.10, 7400. Additionally, this would constitute a false breakout, so ideally, bulls hold this today. With resistance on the upside at 74.50, above, flows are going to become much more supportive. 74.60 is net negative, and this was the breakdown strike last week, I believe on Monday. So this is probably going to be watched by participants. But resistance from a gamma perspective on the upside, 74.70, 75.80. So this could be a bit of a gamma cluster here. Major resistance on the upside, 7,500. That is the call wall, our upside target, and upper bound. And that is defined by the strike with the highest net positive gamma. In terms of the implied move today, 1%. That is an implied high of 75.14 and an implied low of 73.66. Today is the final trading day of the quarter, with both the JP Morgan collar roll and quarter end rebalancing taking place. These events could generate increased volatility, particularly during the final 2 hours of trading. The JP Morgan collar trade has not been in play this quarter. However, the roll can still be impactful. It generally occurs at 2 o'clock and can spark momentum. So watch for momentum opportunities at that time. Additionally, the MOC imbalance could be large and impactful, so be careful holding credit spreads into the close. We've seen some very big moves on MOC going into quarter end. I'm talking like 30, 40 points in 10 minutes, so just be aware of that risk. Now, historically, quarter end flows tend to be supportive as funds mark up performance, so the window dressing effect. In regards to the calendar, Joel's job openings due out at 10 o'clock.